Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with another market recap. We are hanging out on a Wednesday, halfway through the trading week. It is October 17th, and it was another volatile day in the market, as we probably all expected, right? A lot of back and forth here today in the market as traders try to figure out what's going on, try to digest these earnings. Volatility is going to be here till it's not, right? So no terribly huge surprise. Quickly on the earnings front, another big slate before tomorrow's open. Here after hours tonight, we had Alcoa, Kinder Morgan. Alcoa was up a few percent in the after hours trading. United Rentals was down about 5%, I believe, in the aftermarket. Just the initial response to their earnings. We have 5 S&P 500 companies coming out tonight, but tomorrow morning before the open is also a pretty heavy slate. 13 companies, S&P 500 companies reporting. So earnings are going to continue to probably be what matters, in the market right now. Hopefully, as we move through this earnings season, it can give that market some clarity. We saw a lot of back and forth today. You had a Netflix come out with a great earnings report. By all accounts, really solid gap to the upside. Sold off throughout the course of the day off of its high, but definitely was a strong report. Then on the other side of it, you had IBM, who came out with really just a bad report. So I don't know another way to say that. Nicely, at least, gapping down and really showing a lot of downward movement. So, whenever you're in earnings, there's going to be that type of stuff that happens, right? Where somebody's had a great report, somebody didn't. There's naturally some back and forth, during an earnings season, and you couple in, the volatility that we have in the market, and we have a volatile market, that is for sure. And today certainly was no doubt really back and forth day. Right now, what I thought was very interesting. I was watching the S&P while it was happening. Is the S&P, and a lot of things I'm seeing are using intraday signals because of the volatility. Not a huge, life-altering statement there. I know that in a volatile market, it's, day traders really like these type of markets. I found it very interesting that you saw the S&P pull back to yesterday's breakout point, and it was, not all that great at that point in time, and really catch a nice bounce off of that. We can kind of watch these highs going into tomorrow, see how it responds if and when we get to above those, because we're seeing a lot of stocks are reacting, quite, interestingly to those short-term time frames. So if you are around and do like, those day trading strategies, it's a, good time to be a trader. If you're not, and you're not a day trader by nature, this is the type of market that can be a little bit frustrating. I understand that. Don't be afraid to look to your cash flow strategies. Remember, we don't always have to go, directional. I can do some condors or some credit spreads or whatever it might be. So, but going into where we are in our indexes, again, you can see S&P very, very indecisive. We closed really flat all across the board. NASDAQ up a little, down a little bit, closing pretty flat on the day. Same with the Dow Jones, closing very, very flat. So not a ton of, if we were looking for tomorrow's answer, I don't think we got a ton of it here today. Over on the Russell, they, of course, and fairly predictably did struggle at that breakdown point, really sold off early before catching their footing and really bouncing back nicely. That 1600-ish area is going to continue to be important until we're above it. And we're rewarded if we do break above it to have to challenge the 200-day moving average. It's going to be a tough road for the Russell. I think there's just a lot of overhead resistance, including this major level that we're currently fighting with. Over in the material sector, really not much to see here. Back and forth, not up, not down, same place it was yesterday. I do think we can kind of watch this low that we put in these last week and as a potential breakdown point within this sector. We may have a retracement happen before that occurs, but really it's kind of gone very sideways off of that low. Continues to be a pretty ugly sector. Was one of the big losers early this morning. Over in energy, continues to test and hold that support level. Would like to see it show some upward movement, but crude really had a rough day today. And of course, energy stocks were not able to overcome that. As long as we hold this support level, I think we have to respect it. You know, there was a lot of pressure early on this support level, and it held and bounced off of that low. We've seen it happen on multiple occasions. I do think that 72-ish area is very important, though, for the energy ETF right now. That holds, I will remain bullish or worse, neutral. That breaks, though, it's not supposed to happen, right? That would certainly be a bearish signal over in energy. So continue to monitor that. See some upward movement, I could get on board. Right now, we're basically consolidating at support. I get it, and that makes sense, and I'm glad to see it from a bullish point of view. Financials led by some bigger company like Goldman and Morgan Stanley, pretty strong today, coming off of that support level. No terribly huge surprise. I think really one of two things: you were either on board with the financial bounce off of support, and you're probably here, or you were on my side of things, for better or worse, looking for it to bounce off of that, give you a retracement opportunity. So I do think we're still in that upward swing. We haven't seen any sell signals. We haven't had any challenges of resistance. We did see some pretty good earnings from some of those financial companies. We've seen some pretty weird ones too. Still, I think a pretty undecided area, but we are kind of in that upward swing. As we approach resistance, we can start talking about, maybe being more bearish. If we start to see some signals, we don't have to get all the way there. Don't necessarily expect us to get all the way there, but until we see some signals, have to respect the upward movement that we're seeing in the financials right now. Industrials, much like the Dow, really back and forth, really a mad day over there. Continues to basically, I like it, but I don't like it. And I brought that up, a couple days in a row now. I do like this sector. I just don't love the way it looks. I don't have a great handle on it right now, I guess would be the best way to put it. So I'll continue to monitor it, see how we react as we approach that 200, or if we do get a pullback. What I'd like to see, honestly, is some downward movement, see where we catch our footing. Are we able to make that higher low and take out that previous swing high? That would be a signal that I would be interested in, but I'm still days away from seeing that if I'm going to get to see it at all. Over in technology, another back and forth day. Nothing really happened. Kind of closed within yesterday's candle. Got caught up in the volatility. Nobody was really willing to take the reins today, and it shows in so many of the charts that we are looking at. Staples, interestingly, was able to push through, struggled a little bit yesterday and early today, was able to push through that old support level, closing above it. I think you can really use today's candle as your guide, for this sector right now. If it breaks today's low tomorrow, and again, I'm not necessarily expecting that, but if we see that type of price development over the next couple of days, I do think that could be a bearish signal. If we are able to stay above this breakdown point using basically yesterday's low as kind of the support or stop loss, if you will, to hold it together, I think you could make an argument to be bullish. I do not feel great about this sector. I am not bullish on it, but I do respect the fact that, unlike the rut, who got smacked down pretty heavy as it tested that resistance level, being able to push through it, I do have to, of course, respect. Going to have, the 20-day moving average falling as a test. Going to have a lot of overhead. It's got a ways to go to get me bullish. Right now, you are making lower highs and lower lows, and that's got to stop before I get on board. But I do appreciate and respect the strength. I'll be watching it, see if we do push down, say below, around 53. I think that would be a bearish price signal as of right now, but we may never get there, right? It's not easy to break resistance. So there was certainly some money willing to jump in. It wasn't me, for better or worse, but there was definitely some money willing to. Over in utilities, very back and forth day, no terribly big surprise. It's been a very interesting place, for most days, money's been going into utilities during this volatile stretch. Right now, kind of back and forth as people are catching their breath. I don't think anybody quite knows what to make of it. We have, we're in the middle right now. We're in one of those rough spots. If you're in, I think you're perfectly content with where you find yourself. But if you're not, we have support way down there at 53. We know all of that resistance we have up there in that 54, 50-ish range. And we're here at 53.65. We're really kind of smack dab in the middle of support and resistance. Tough place to want to buy or sell. Whether you're bearish, want to bet on resistance holding, or bullish, want to bet on support. We're in the middle. Neither side has a good risk to reward right now. So I think we really have to watch this one over the next couple of days to get a good read. I do think overall, I would maintain a bullish posture on it until we get to resistance, because it hasn't done anything wrong, but it does seem to be one of those areas that may be running out of a little bit of steam right now, just from the looks of it. Healthcare, really solid day, as we kind of expected. This is one of those areas that had been such a strong sector that I think people wanted to make excuses. I think they wanted to make excuses during last week's sell-off. It was just impossible to make enough of them with all of the selling that we saw on Wednesday and Thursday. Certainly some nice upward movement. We're kind of smack dab in the middle of some moving averages right now. Not that that's necessarily a good or a bad thing, but certainly a thing, no doubt about it. I think we can push through that to 20, which might take some market, behind us. The market at least not throwing it fit and selling off again. I do think that could be a signal that there is some left in the tank. So that can be a price point that we're watching, but really have to like what we're seeing. One thing that you want to be aware of and keep very much in mind is during this rally that we've seen, some things have been uglier than others, right? But really, we haven't seen those intraday support levels break. So we haven't seen those day traders, again, I'm speaking generally, obviously things like that have happened, but we haven't seen those day traders getting those strong signals in the S&P or in the healthcare sector here. When that happens, and it will, how they react, right? The day traders get the party started, and then what happens then? Do traders jump in and start selling dramatically? Well, that wouldn't be surprising. I'll be keeping things on a relatively tight leash from a bullish point of view, I guess, because of that, until we actually see some good reasons to sell and how we respond to that. I can only speak for myself, but I wouldn't, be willing to make too many excuses right now for stocks. Over in the discretionary, another pretty rough day over there, although did kind of close in the middle of the day's trading range, kind of using the support level from yesterday, just north of the 200-day moving average to catch its intraday low. Doesn't seem to be a great area for me right now, but that's just me. I do respect the technicals. It hasn't broken support or anything like that, but let's see what happens when and if it does, which of course eventually everything will, right on that intraday level especially. So really not much has changed. I think as you look at the chart over in discretionary, either you were really cautious of it like I am, and you probably still feel the same way, or you were comfortable moving back into it off of the low, breaking that intraday resistance yesterday. Don't really think it's done a whole lot. It didn't break intraday support or resistance here today, so probably haven't changed your opinion too much one way or another. Real estate did kind of start to shape up for some potential bearish opportunities, in my opinion. I don't know that we're quite there yet, and another volatile candle. Would have loved to see a little doji, of course, instead of all the back and forth we saw today. But now as we're kind of running into those challenge areas, certainly money not quite as willing to jump into that sector right now. We'll have to monitor it going forward, see if we get some downward movement tomorrow. I don't think we have any confirmation candle in the form of today's action today, personally at least. But the price-wise makes sense that this is about where it's going to struggle. And again, let's just go to maybe, maybe a 30-minute time frame to kind of illustrate this point. This is the trend that these intraday traders are trading, right? I know not everyone's looking at a 30-minute chart, but it does illustrate what that intraday trend looks like. It's not broke. It's not done anything wrong. But, hey, we potentially double top. What if we break support? We've seen that pattern all over the place in the last month in the market, right? The double top, get to support, break it for that M pattern. I'm not saying that's going to happen. I'm just saying that once we get those legitimate intraday signals to sell, maybe some sellers are going to step back in. That's what I will be watching for. And right now, in these volatile markets, those intraday charts can be helpful to build your entry points in even your swing trades, I think at least. Lastly, looking over at the communication services, probably buoyed in a large part by Netflix. Had a little bit of a positive overall move, but really, again, much like the market, it's hard to really make heads or tails of it based off of today's price action. All it's showing me is buyers they still do exist. there are traders out there willing to buy off of these intraday signals, which is a good thing. And we weren't seeing that last week, right? We watched, support level after support level get taken out. So if nothing else, we are seeing maybe a little bit of stabilization try to come into the market as traders are willing to at least be on the bullish side of things. Over in the metals, not a lot to see. We continue to hold our breakout point over on gold and on silver. Not really any movement dramatically one way or another. Again, with gold, 1220 is my line in the sand. A little bit below that would be where I would no longer be bullish. But as long as that breakout point holds, I will continue to maintain a slightly bullish outlook over there on gold. Silver continues to trade within the same range it's been stuck in for a while, hanging out above 50 but below 15. I think, again, as I said many times, and I'll probably say a few more before it's all said and done, I really think 15 is the number that we're looking for right here. You can look to buy off of bounces if you find yourself really bullish on silver, off of the intraday. For me, I don't find myself there. Obviously, if we pull back to the support level, that could be an area that could be tempting, but we have to get there first. But again, like I've said for several weeks now, for me at least, it's above 15. I'm willing to be a wimp and let anybody else capture that movement to get that confirmation. Nice upward movement over in the dollar today, pushing back through that 95, through that 95.50 on a very strong candle. Again, I'm not a huge fan of this type of chart. I'm not a huge fan of this right now, but we now know, that yesterday's low should be our swing low. We should not go below that. I can now recognize that would be a bearish signal if I break yesterday's low. Obviously, I wouldn't expect that to happen tomorrow, if at all, but I can now prepare, whether that's, stop loss management or potential bearish, entry point. If we see upward movement, that is a confirmation candle. That's huge upward, price appreciation. So hard to interpret that as anything other than bullish. I just don't love the chart. It's just too choppy and too messy. And I am a boring person when it comes to trading stock. I don't need to be fancy, and I don't want to be. So over in natural gas, again, traders just kind of using any real excuse they can find to get into it because of the overall strength within the natural gas market right now. Not really any great technicals, set up today, but a very strong upward movement. But again, we knew to expect that was the more likely outcome, right? Because of strength, we knew that we had support in the form of last week's low. We're now testing that resistance level. If you're here, you're obviously respecting that resistance, but that's not necessarily doesn't mean you have to get out. If you're not, we can look at that as we'll start looking for some potential breaks of that resistance. If we are bullish and not in right now on natural gas, you can always, again, I love the hourly charts generally, but I really love it when it comes to natural gas. So we can watch it for a potential breakout if we are bullish. I understand if you're not, it's still fairly extended. It never really got much of a pullback. I did get one though, right? We did get some selling last week. But overall, we remain pretty strong over in the natural gas market as we test resistance. I'm not overly concerned about resistance, but I will always respect resistance because, well, it's resistance for a reason. And lastly, over in crude, it had a rough day, but it didn't do enough to sell me either way. It closes at $70.05. A close below 70 would have been, I would have interpreted that as a bearish signal. Didn't happen. It broke it, but it didn't close. And to me, the close is what's very important. I think we can kind of look at it from a couple perspectives. Breaking, the intraday low here today, tomorrow, I do think, well, I can only speak for myself, but I would interpret that as a bearish signal. And I would honestly expect if the bears take control, it's probably not a hard thing to work our way back down to the 200-day moving average. But on the other side, that number matters, right? We've seen it matter a lot as of late. So if we see some upward movement off of it, I'm not a huge fan of the way it looks now, because now I'm concerned that we've made some lower highs and some lower lows. And yeah, we're at the 50 and we're at that number. And I would get people willing to take a shot there. And from a risk reward point of view, it makes a lot of sense. If I buy it at 70.03 with a stop loss at 69.73, I'm not into it for much. Low risk per share. I lose 30 cents. But if I do bounce, even if I just make it to the high from yesterday, that's a, $2 upside. So the risk to reward is very appealing. I can be persuaded, just not today. For me, crude does not, I never like to jump into things a day after a huge move. And sometimes I regret it, don't get me wrong, but that's just not who I am. But price-wise, it makes sense. If that intraday low falls, though, tomorrow, I would look at that as a pretty bearish signal personally, and I would expect that there is some downward move into that 68 range without really a lot of technical reasons, at least, for it not to go there. So I will be watching that intraday low pretty closely as we move into tomorrow and Friday. So that, ladies and gentlemen, is where we find ourselves after another volatile day. Again, anytime we're in a volatile market, we just have to expect the volatility to be there, right? We might love it. We might want it to go away. But, I'll expect tomorrow to be volatile too. Maybe I'll be wrong, but that will be my expectations until we simmer down. And I think that's always a proper way to look at it, so you're not caught off guard. Oh, why was today so volatile? Because yesterday was, right? So be careful with what you're doing. Follow those trading rules, of course. Be sure to check those earnings calendars. There's a ton of things coming out in the next week and a half, so make sure you're on top of that. With that, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. If you haven't already, be sure to subscribe to the channel and hit the notification bell. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're following over the course of the market day as well. If you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up to let us know we are on the right track. And with that, get out of here. Happy trading, and I will see you in the next one.